Good evening, everyone. Let's look at there's a few new income ETFs that I want to share that I've learned about from um, another person that's interested in income ETFs. And so I was thinking there's like there's actually a ton of income ETFs, and I think it's a good thing to learn about because it's like income ETFs can be helpful in various ways. If you don't have, it's a good. Well, first of all, it's kind of income ETFs are a good place to learn about investing. If you're a beginner investor, it's kind of good to get a monthly income from your whatever savings you have. And so like that, last few videos I did on income ETFs, there's there's several of them now, and they're good because they have monthly income every month. You get you'll get a dividend of anywhere from maybe 6 to 12% on most of the S&P and Nasdaq income ETFs, or even the total stock market. There's income ETFs there, and so yeah, I think they're actually amazing. If you're if you want to make money on your money, there's not many better places to start. To at least learn about the stock market than income ETFs, because you can, every month you can look forward to, like 8, 9, 10, 11, 12% dividend, and a lot of times these income ETFs that I've discussed previously do a real good job maintaining their NAV, which means they maintain the quantity of money that's in the ETF, and then the ETF tends to either appreciate slightly over time or maintain the NAV. And I was kind of the last time I kind of looked favorably upon a few ETFs that were not only maintaining their NAV but were increasing their NAV. And so you're like each month you get a certain percentage of whatever you have in the ETF, and then you also get NAV appreciation, and so you'll you increase money in your in the ETF in more than one way. And I think it's an excellent way for people to learn about the stock market. If you have a job that's pays you like everything you need or more than you need, and you may not need income ETF, but they're helpful for like you could get something like SPY or VUG, or like like the QQQs, and then if you don't like, but these income ETFs, like I think there's a little bit less risk, and there's less risk because in a a negative market and in a down market than, or a bear market, I'm going to call it bear market, then you're going to lose less than you would lose if you had something different. And so the risk is less, but and you're also you're getting a monthly income, which is dividends are huge. It's something to look forward to every month. And kind of another way to conquer poverty, or at least help people to put themselves in a better financial situation. And so I'm very grateful that there's a lot of choices these now. There didn't I think before 2022 I don't think there were much income ETFs like this, and they're fairly new products, and they're actually quite they're very good products. And they're helpful for anybody, like anybody who's retired, anybody who's like in between jobs, anybody who's just wants some more income every month. If they you could choose to put your money in a savings account, or you could put your money in an income ETF. You put your money in an income ETF, you're gonna make substantially more money than you would if you put your money in a savings account. It's just kind of how the system is. So it's good to learn about how to best position ourselves to take advantage of the system that we have. And So anyway, so that's just kind of I get started there. But anyway, so so J.P. Morgan has they've got the two of them that they've had for quite some time. One of them is JEPI, JEPI or JEPI. Another one is JEPQ, and both of those are the JEPI is more it's I don't want to say I mean it's kind of handpicked by J.P. Morgan traders that work there, and so I think the last the dividend is maybe 8%, and it's a monthly dividend, and it's not completely S&P 500. It's kind of like kind of a mixture of things based on what their financial analyst experts what they pick, and so that it's kind of a mixture of various different stocks. There's also JEPQ, and that one's been around a while, and JEPI has been successful. JEPQ is more NASDAQ focused, and so it's kind of focused on the tech companies. That one's been quite successful. That one's got a bit higher dividend yield, monthly dividend, and that one hasn't been quite around quite as long as JEPI, but both of them have done a good job maintaining their NAV or increasing their NAV as well as giving a monthly dividend. I just learned about this recently. There's new income ETFs from J.P. Morgan, and so when I hear something, learn about something like that, I'm all ears, because the previous ones that I think they're taxed as like ordinary income, and so like they might have a bit higher tax rate than some of the newer ones from like Goldman Sachs, income ETFs from Goldman Sachs and from Neos. They have a little bit higher, like the previous J.P. Morgan, like JEPI and JEPQ have generally taxed at a higher rate than there's like some of the other companies, and so I think that J.P. Morgan decided to expand their new active ETFs, expand innovative derivative income suite, and so they basically they've got two new ones. One is ROCY, another one is ROCQ, and they're both ROC is, I'm guessing they're calling it at least the first three letters. ROC because it's it's a return of capital. It's taxed to be a return of capital, so it has a bit favorable tax treatment compared to the other ones that they have, JEPI and JEPQ, and so they have anyway. I'll just read a little bit of their and this is something that I guess it started it's something that at least the news release was on March 19th, 2026. And, I was trying to get some more information on the amount of the dividend. And I don't have, that I haven't been able to get that yet. So I'm kind of following these right now, and I'll probably put some money in one or both of these sometime soon. But I want to know a little bit more, like when the dividends are, and how much the dividends are, because I think that's helpful. But yeah, they have J.P. Morgan Asset Management today announced the launch of two new active ETFs on the NASDAQ exchange as part of the firm's landmark derivative income suite, the J.P. Morgan Equity Premium Yield ETF, ROCY, and the J.P. Morgan NASDAQ Equity Premium Yield ETF, ROCQ. With the introduction of ROCY and ROCQ, J.P. Morgan is now the only ETF provider offering a comprehensive suite of actively managed derivative income strategies, with three distinct methods of treating options premium. Led by Hamilton Rayner, CIO of the U.S. Core Equity Team and head of U.S. Equity Derivatives, both ROCY and ROCQ will be managed by members of the U.S. Core Equity Group, who oversee the suite of hedged equity and equity premium income strategies, including JP Morgan Equity Premium Income (JEPI) and JP Morgan at Nasdaq Equity Premium Income ETF (JEPQ). So these, like I said, these have had, especially this one has had quite a long track record of success, several years, and this one has also had significant success. They started this one, so 319. If you don't start your income ETF at the good time, at the best time, then you might not be the overall winner. So like, if you don't start your income ETF in like say 4/8 of 2025, then you got to pick another good time. And I think that 319, there was a lot of worries in the stock market, fear in the stock market about basically about like obviously the Iran U.S.-Israel war, and so like obviously people were selling off at early part of March, middle of March, and now we're into April and people are buying back in the stock market, and so they definitely picked a good time, and that's something that's like it's not easy to do to pick a good time. Like to me it's always better to hold something for long periods of time because you don't know if something crazy is going to happen in the economy and in the world, in terms of like war, in terms of like tariffs, in terms of oil prices going up. There's all kinds of things that can influence the stock market. There could be recessions, there could be anything in between. And so anyway, clients want practical tools that work in real world markets, said Hamilton Rayner. ROCY and ROCQ are designed to seek tax-deferred yield via return of capital, smooth the ride relative to broad benchmarks, and stay engaged for upside, so investors can focus on progress toward their goals, and not just the next headline. Both strategies integrate JP Morgan Asset Management's fundamental research with a disciplined options overlay. The teams actively manage the underlying equity portfolios. ROCY invests significantly in U.S. large cap core equity securities, while ROCQ focuses on Nasdaq listed securities and actively manages the call option overlay by selling call spreads to generate yield and allowing the funds to reparticipate in strong up markets. The fund's yield represents the annualized distributions paid to investors as a percentage of its net asset value, NAV. Distributions may be derived from multiple sources, including portfolio dividends, some capital appreciation, and premiums generated through the options overlay. The launch of ROCY and ROCQ expands our derivative income suite, allowing investors to choose the most appropriate solution that fits their objectives, while leveraging the skilled investment team and research capabilities from JEPI and JEPQ, said JP Morgan Asset Management Global Head of ETFs Travis Spence. Each fund is priced competitively at 35 basis points, 0.35%, which is actually probably I think that's probably the lowest. Actually, I think Goldman Sachs might be a slightly lower cost. But I think that it's very, very low cost. JP Morgan Asset Management is the largest issuer of active ETFs globally, reflecting our commitment to delivering innovative investment solutions and strong results for clients. So they have, I was trying to find, there's another. This is an ETF. This is kind of a similar. That's just kind of a news release from. It's actually very similar from what the actual company. Both ETFs carry an expense ratio of 0.35%, which is already mentioned. Let's see here. This approach includes defensive alpha pairing bottom-up stock selection with derivative overlays, refined payoffs, utilizing index options and structured spreads to fine-tune the risk-reward profile, precision tools, moving beyond one-size-fits-all to offer distinct buckets for core income, growth income, and hedged exposure. Ultimately, the success of this next generation of ETFs will depend on more than just the monthly distribution. It will be measured by how effectively managers can navigate market swings while ensuring investors don't get left behind during equity rallies. So that's kind of, they had massive success with JPI and JEPQ, and I think that these newer ones, like the expense ratio is the same. We don't know yet what the dividend is going to be. At least I haven't been able to find that information yet. I'm going to keep monitoring and trying to learn what typically the S&P 500 or the broader index income ETFs have slightly less dividend income than the Nasdaq, the tech heavy. So we'll see what how this plays out, and we'll see how this but it's something to look forward to, because I think that there's like the return of capital form of income ETFs. It's basically like they target tax deferred income via return of capital distributions, a feature designed for the tax sensitive investor. So if you're worried about April 15th, if you're worried about paying a high amount of taxes, then you can it's a good idea to take a look at these ROCY and ROCQ, because you're going to go pay less taxes, at least initially, and so that it's, anyway, something to look forward to. I was looking at the prospectus, and they give the expense ratio. They don't. I couldn't find a spot for the actual the dividend. I guess they're gonna. It's so that if it was the 19th or the 20th was when the thing was released, then it'll be the 19th or the 20th when. I'm just guessing. They can pick a day whenever they want for the dividend, and go from there. But yeah, it'd be interesting to see what the dividend is and how that compares to some of the other ones, that the other income ETFs, and I guess they're probably going to try to be competitive, and yeah. So, but yeah, I was looking at what else did I see? So there was yeah, so like on Yahoo Finance, like this. So it's this is ROCQ. This is the Nasdaq, the tech heavy, JP Morgan, the new ETF income ETF that we've discussed. That it started on 319. It's already had NAV appreciation of 5.39%, and of course, look like 330 was a low at 47.38, opened at 49.96. So we kind of had some more market decline with the Iran war, and then the closure of the Strait of Hormuz. And then we've kind of had more market optimism here, and we've had obviously market optimism so far this week, and so yeah, there's been quite a rally here since the end of March. The April's had quite a good month so far for the stock market, for the Nasdaq, and so it's at this thing is at 52, 56, and it started at 49. It started right around 50. It started on 49.96. So there's already now appreciation. Whenever they decide to give whatever dividend they're going to give, maybe they drop a little bit, but their goal is to, I think, maintain at least 50 for the NAV. That's probably their goal, at least. And yeah, so that's and then so this is ROCQ Holdings. This is on stockanalysis.com. In the top 25 holdings, there's stocks from mostly stocks that are. I mean, like pretty much all Nasdaq stocks. Obviously, Nvidia, Apple, Alphabet, Microsoft, and Amazon are Walmart and Amazon are kind of more consumer cyclical, and they're not just tech, but they're other things as well. But a lot of these companies are exclusively tech. Pepsi's a beverage company, and there's actually some medical companies as well, healthcare companies as well, and so that kind of gives you some information on the stocks that are in ROCQ, and then we'll look at ROCY, and that one has increased 4.33% since 3/19/2026. So it's been around less than a month, and both of them have increased. They haven't. I don't think they've given out their. Either one has given out their first dividend yet. So we'll learn more when they give out dividend, and I like to know like when the dividend is going to be, and how much it's going to be. Like as a percentage of the total that you have in the account, or the total of the amount that's in there. Like how to say that. Like basically, I want to see percentages. I want to see the when they give the dividend, and so that's helpful for me to compare and contrast with other similar products. But like I said, they've done well with the older products, and so these two newer products I think will be helpful. And Yahoo doesn't have all the numbers yet on here, neither does Stock Analysis. So yeah, this one also has ROCY. ROCY has some other not just tech, but they also have ExxonMobil, MasterCard, Bank of America. They have some banking companies. They have more. They have tobacco companies, Lowe's, and so they've got more than just tech. But of course, tech is kind of like the whole market is, like the top 10 S&P 500 are very tech heavy. So even if you get like an S&P 500 fund, you're going to be tech heavy as well. So anyway, I think that concludes the discussion today. But it's something to look forward to. I'm going to follow these. I don't know that I'm going to buy it quite yet, just because I want to know a little bit more information. But I'll probably be putting some money in these sometime soon. Anyway, hope you have a wonderful day.